Well, it's official. The Australian housing market has entered a downturn, with the latest data from Domain showing combined capital city house and unit prices falling for the first time in 3 years. Let's go through the numbers now with Domain's Chief of Research and Economics, Dr. Nicola Powell. Very good morning to you, Nicola. Thanks for your time.
Good morning.
Let's go through these numbers in a little bit more detail. I note that your report says the downturn is indeed broadening.
It is broadening and becoming much more established. We saw house and unit prices decline over the quarter across the combined capitals, but there are some cities that are seeing deeper price falls. Other cities are still rising, but the deeper price falls are coming out of markets like Sydney, Melbourne and Canberra.
Yeah, so let's go through a little bit more in detail of the state by state and territories. You mentioned there those deeper falls in Sydney and Melbourne to the tune of, 2.9, 2.5%, that quarterly change there. But it's not the same story across the board, despite the combined number being negative.
That's exactly right. I mean, the theme, though, largely across Australia is even those cities that are still growing, they're growing at a slower pace. We're certainly seeing those deeper falls in Sydney and Melbourne. They tend to be more sensitive to changes in interest rates, and I think that's what's being amplified through those housing markets. I mean, when you look at Sydney, we saw house prices fall by about $60,000 in the 3 months to June. But when you look there, you can see other markets like Brisbane, like Perth, that are still marginally rising. But then you've also got markets like Adelaide. Adelaide was quite the interesting one. It was the only market where we saw house prices re-accelerate over the quarter. It really was the only city to do this. But largely speaking, those that are growing aren't growing as fast as they once were.
So what is the reason behind this? What is the convergence on pressure demands that you've found?
The things that are just converging all at once. Obviously, 3 rate hikes this year, and we know when we see rate hikes come through, it obviously dents borrowing capacity and takes a little sting out of demand, and that's exactly what we have seen. Cost of living pressures are also weighing on, and also consumer sentiment has been very, very weak. And when Australians feel low about their own personal financial circumstances and the economy, they delay their decisions around property. And then, of course, we've seen taxation changes to the way that we treat property investment, and that is also having an impact as well.
Yeah, on that last point, Nicola, there, how much have the changes in the budget with respect to CGT changes and negative gearing changes impacting, say, units versus homes?
What was interesting for unit prices is that we saw pretty much every single capital city decline over the quarter for unit prices. When you're looking at house prices and the markets for house prices that fell, it was deeper, but it's this broadening and every single capital city for units actually falling. I think that tells a lot. I think it says a lot about investors. Investor sentiment has weakened substantially, and I think we have seen a pullback in investor activity, and that is likely to continue. And I think that's one of the reasons why we've got this broad weakening of the unit sector across every single capital city, that is, apart from Darwin.
Yeah, I guess the big question is, how long is it expected to continue for this downtrend?
So we are expecting 2026 to continue to see those deeper price falls. It is going to be a weaker rest of this year. I think, though, to change the conditions, we really need something to occur to really be that kind of game changer. And that will be a rate cut. But ultimately, we are going to be in an environment where interest rates are going to be higher for longer. And the expectation for a rate cut isn't going to be anytime soon. It really is only likely to be in perhaps the latter half of 2027. So I think we are in for weaker conditions. What we will start to eventually see, though, is new listings will start to pull back. And that concept where sellers just don't want to sell when the market is weak will start to help to stabilise price. We have seen a sharp decline in house prices, particularly in Sydney and Melbourne. So it does mean it has been quite the sharp start to the downturn in these cities.
We know that economists model certain scenarios when it comes to the changing elements of the equation, whether it be sentiment, government policy, tax, interest rates, etc. How would you liken the period that we are going through right now to what we've seen in decades gone by when house prices have pulled back?
It's quite different, really, because what we've got at the moment is obviously rates have moved higher. We've seen that before, and we know what impact that has on the market. But we haven't had a policy change that is really directed to one buyer group, and that is investors, occurring at a time where the market was already weakening. So we have to remember that Australia's housing market was already weakening prior to the budget and prior to those taxation changes actually going through. But what we have got is that major change, taxation change, is occurring when the housing market is already weak. So it is multiple things happening at once.